Okay, everybody, it's Casey Stubbs, and I'm here with Steve Vettorel from FXES Trader. Hey, Steve, thanks for being on the show today.
Morning, Casey. Thank you.
So, we had a really nice talk before the show, getting everything all set up, and after talking to you, you have shown me some things that you don't see too often. So, with that being said, there's a disclaimer in the description. Trading has risk, substantial risk involved, so everybody needs to be aware of that and read the disclaimer. Steve, tell me a little bit about yourself.
So, graduated Xavier University finance degree 1995. Unfortunately, because a lot of people ask me, well, how did you get into business and all that? Unfortunately, my dad had a massive heart attack the next summer and he died. And I literally, as a junior in college at the time, had been thrown into managing a portfolio. It was mostly individual stocks and a number of funds at Vanguard. So I sort of just dove in to help out my sister and my mother in terms of running the portfolio as a very young college student at the time that was completely green. I had no idea what I was doing. So I spent the next 2 years just diving into understanding portfolio management and trading. I think my sob story caught the eye of one of the recruiters at Fidelity Investments, and I was hired by their parent company, FMR, in the summer of 1996. So I started trading actively on the Spartan options and trading desk equities for clients through 1997-98. Then I was offered a position at the Philadelphia Investor Center, which is just one of Fidelity's branches. So moved out there, became a full financial planner, Series 7, 65, 6, all the licenses for insurance, became a specialist in wealth management and trading. At that particular time, the tech market was tearing up. And I had an opportunity through a number of options trades I did to put some significant money aside and pay for my first townhouse. So that absolutely gave me the trading bug. And although I did blow up some capital in the early days, just rookie mistakes, right? Did really well through the tech boom that took place. And the problem with the beginning of this story is that at the time, the buy and hold and be diversified, which are all very important things in financial planning, were being pitched. I saw completely different stuff in terms of how portfolio managers ran their own personal accounts. So I got privy to trade some of these accounts. I saw how they operated. And I think the things that surprised me the most about individuals like Peter Lynch is that he had almost 7,000 trades inside his personal trust account. And that got me thinking, well, geez, maybe I should learn to become more into individual trading, technical analysis. So over the course of when I would be working with clients, I spent a lot of time personally trading in the beginning of 2000. It's when I built my own system in the house. I had the same type of trading system in my office at Fidelity. Finally got some high speed and began trading. It was, needless to say, a schlock setup at best. So did pretty well. I was advancing, won a couple of President's Circle Awards at Fidelity, and had a lot of clients love me, which was great. But I always sort of yearned for a deeper knowledge in trading, and I wanted to run larger amounts of capital. So I was recruited away from Fidelity by Ken Fisher. Fisher Investments, big organization at the time out of Woodside, California. Great thing about Ken Fisher is I was mentored personally by Ken along with some of my other colleagues in modern portfolio theory, Markowitz, all about macro money supply. So I got a tremendous, essentially free education as I was helping raise capital for the firm in a regional VP type of role. So through that period of time, I was introduced to Dimensional Fund Advisors, introduced to a number of gentlemen at that organization that won Nobel Prizes like Gene Fama. I gained just tremendous respect for them. And with a colleague at Fisher, we decided to form Aumenti Capital. It's a small, long, short fund. We operated out of our office in Philadelphia. We did a lot of clearing through Goldman Sachs at the time, and unbeknownst to me, I was up at Goldman in a particular training session with a couple other organizations, and I met my mentor. So he was an individual that traded futures on one of Goldman's big international desks. And he was an expert in auction market theory and modern portfolio theory, as well as technical analysis. So I was very fortunate to sort of strike it up with him. We had a number of connections outside of trading, I think, that helped solidify a friendship. And he completely taught me the summer of 2006 and 7 market profile. He taught me all to chart, taught me how to aggregate, taught me about everything all the way down to order flow, which essentially is the core of execution, and how to aggregate all of that data to make decisions on it outside of just normal candlestick charting that he taught me, patterns, all that. So I put all that to work, trading the fund with my partner. I had an opportunity to essentially, my partner took over the fund. He was a bit crazy to deal with. And I went out on my own, as I'd always wanted to do, and took and built a book of clients for just my own individual RIA practice. The company is called Benchmark Wealth Advisors, still in existence today. Between Benchmark and our back office organization, which is Brookstone, we essentially just manage accounts for clients at TD Ameritrade in an institutional capacity. That takes up most of my time. So about 2012, I had a number of individuals come to me and say, hey, can you mentor us in how to trade the futures markets? I've been doing it for some time in two capacities. And I looked around outside, and I think the problem I always had with this industry is that most mentors out there, it's difficult to find out who they are. It's difficult to do any research on them, or at least get a decent feel of their credibility. So as I often joke with clients, you can Google my name, right? You can go to broker check and check me out. I've never, ever had a disclosure. You can find tons of information out there about me. And I think it's important, if somebody's going to be a mentor, they better have a clean track record. They better be good at what they're doing. So I started FXES Trader, and it's a small coaching company. Doesn't take up a lot of my time, but occasionally I'll mentor students. I think with a lot of that activity and education at the time, really getting online, I attracted the attention of Investopedia, and they put me in the running for, which I ultimately won, their top 100 financial advisors award in 2017. So that was pretty much, the President's Circle awards were great along the way, but that was by far the crowning achievement. And a lot of that was based upon education for students and individual investors or traders out there looking for, that edge in trading, whether it be anything, which was primarily futures for me at the time. So essentially that is where I am today. So the real interesting thing about the whole story is that all along the entire way, I had been searching for an algo that will actually trade either equities, futures, and or the Forex markets, which I've become heavily active in 2018 to today. And I had a good friend approach me and said, hey, Steve, with your background, you really should take a look at a phenomenal group of products we're putting together. So I met with management, I met with the board. They offered me a role as the chief market strategist of Auvoria Prime, which takes up probably 20-30% of my time. It's been increasing in its frequency, which is great. But essentially, we have or are about to bring out in our phase 2 launch 5 pieces of software that have completely verified track records, and they've done exceptionally well. And some of the links that Casey will post and the disclaimers to go along with that are important to note in this discussion. But that's kind of where I am today. So just managing client portfolios, on the road, or at least a lot more Zoom calls with clients these days. Out there, but markets have been fun to trade. I post a lot on Twitter, all that, but I try to really have, with a lot of my communications to traders, I try to have understand the psychology of trading theme. So if you want at some point, Casey, I can sort of give you the 4 tenets, if you will, of trading psychology. But essentially, that's the whole bio.
All right. Well, there's a lot to unpack there, Steve. You got a lot of experience, which is awesome, and that's why I wanted you on the show, is just to really try to unpack some of that. So I would say the first question I have is, what you've done is immerse yourself in the financial industry. You've had a lot of people that you knew that could teach you things along the way, because you were in the industry, you were working with some of the top professionals, and you were able to gain a lot of experience that way. Most of the people who are listening to this show don't have that kind of access to professional advice the way that you did, as you were brought up in the industry. So what would you recommend for people that are listening to the show that really need to get access to some of the smartest minds in trading today to help them get the information they need to make good financial decisions to increase their portfolios? What type of things would you recommend for them?
So the beauty of Twitter and some other thin type of social medias is that there are very giving individuals out there that put that have a billionaire status, that put a lot of great information out in the marketplace. So what I always challenge everybody to do is, if you follow me on Twitter, or at the very least look at who I follow, you're going to see about 110 people that are absolute experts in what they do: trading, psychology, trading in any area, equities, the futures markets, Forex, that bring just tremendous amounts of wealth of information to the table. Guys like Steve Burns, okay, or Double Line Capital's CEO. There's a number of people. Tommy Thornton, they put just a lot of great stuff on Twitter. Brett Steenbarger, you guys will hear about that a lot from me in the chat today. Denise Shull. These are all experts that put a lot of information out there. Because at least in my experience, the reason I spend so much time on trading psychology is I've seen the vast majority of traders that have failed. It's because they could not get a grip of what I call the inner monkey. So I spend a lot of time focusing, just like we're framing the building of an elite NCAA type athlete, that exact type of blocks of building, if you will, is exactly the same thing that makes a superstar trader. So in my experience, you have to have the ability to deal with losses, the ability to take risk, but at a calculated point. But at the same time, you have to have the ability to maintain focus, calm, have a purpose in what you do as far as trading. All important components I can build on if you wish. But at the very least, there is an absolute full academic degree in trading out there on just blogs. I mean, look at how good Casey's blog is. There's a plug for our leader here, right? I mean, you have a ton of great stuff on your Twitter feed. I mean, I was reading through a whole bunch of it yesterday. Got a lot of experts out there offering a lot of really good tutelage type of material. So it's just kind of get out there and dive into the blogs, videos, whoever's Twitter feed you're looking at. And,
I actually just jumped on your Twitter. Are you FX ES Trader? Is that your Twitter handle?
At FX ES Trader.
So
right?
I'll drop that in the link too. And I just jumped on and followed you. And I'm going to be looking at the list of people that you're following, right? So I just did that. I actually popped it up on the screen now. So I'll be taking a look at that. And so I recommend everybody else that's listening along do that. It's FX ES Trader. It's at FX ES Trader. So take advantage of that opportunity. Really, that's good. So I agree with you.
Keep in mind, there's like 5 to 6 big hedge fund guys that actually post on there that have run big quant organizations, or in the case of Double Line Capital, it's mostly a credit-based fund in LA. But Jeffrey Gundlach is exceptionally well respected in this industry. They run over 100 billion. He posts everything on Twitter. That's what he's doing. I mean, it's almost like he opens up his book, his trading book, and he's talking up his book to a certain degree, right? But it's a great education. Hyman Capital Management, they're exceptionally well respected fund out there. Everything gets posted on Twitter. It's cool.
Yeah, and I think a lot of people don't realize that. And I'll give a plug. I'm on Twitter too. It's at Casey Stubbs. As Steve said, I post some good stuff too. So add it to the list, guys. Add it to your resources. Be educating yourself, getting yourself access to good people. That's one of the reasons why I have the podcast, because I want to get access to good people. It's to produce a show for you guys, but then I always say it's a little selfish too, because I want access to great people. And just interviewing people on this show has made a huge difference in my investing and trading. Huge. So take advantage of what we're offering and go after it. So Steve, I wanted to switch gears a little bit and talk about different types of investing and trading, because you have a ton of experience. What's been the most successful trading for you in all of these years of different types of investing?
Because I actually was just asked that same question by a retired physician that wants to become a student. And here's how I answered his question. I said that now, with the sort of metamorphosis, if you will, of my trading, I would rather have a semi-automated system or some sort of algorithm running a bigger chunk of the portfolio, just like a HFT type of hedge fund, like a Renaissance Capital, Jim Simons's group. They're all automated. Okay. I'd rather have that, as long as the algo has proven itself in terms of performance, low drawdown, all that fun stuff. So I'm much different now than what the landscape looked a year ago. So a year ago, I probably spent 20% of the week discretionarily trading, and just essentially manually trading, whether it be equities or the futures markets, so forth, or Forex. But I found that with some of our new pieces of software coming out, and the just mind-blowing performance with like 15, 11% drawdowns, drawdowns are really low. And I mean, some of that is just almost impossible to replicate in manual Forex trading unless you're really good. And the problem with most traders, investors, is they just don't have the time to learn this. I mean, I've put, gosh, I don't know, probably 10,000 hours plus into trading, just in education. A lot of people just don't have that kind of dedication. So that's why it's great that, retail traders now have access to software. They can do some of the trading for you. I still do like to do a lot of manual trading. I don't trade that much in client accounts. We certainly have more this year because we've had, big moves in equities, a huge fall off, which is a monster buying opportunity. Now everything's frothy again, so we've lightened up in a client accounts. But, there typically isn't that much trading in client accounts. So I probably put about 20% of my day into trading, which used to be a lot more. But essentially, the key thing with most traders is, they learn to do one thing great in manual trading land, which is fine. But I still think that diversification in this area is going to be the best for you. So, have a futures account if you're good at what you do. Don't execute trades with a lot of risk. Have a Forex account. Have, an interactive brokers type of account where you can do all of that stuff in one account if you wish. But essentially, have diversification in what you do. Have your equities you're holding long term, or the ones you're trading swing term. I'm not a big fan of options just because of the Greeks and the time value, loss of money, and you really got to stay on top.
It's pretty complicated.
Yeah, and
Yeah.
there's everything from condors, straddle, spreads. I mean, a lot of people just love that stuff, but at the end of the day, your stuff just loses value whether the underlying equity does well or not, right? So you're constantly fighting that. I'm just not a big fan of options. If you are going to trade options, be a writer. So those are the guys that make the money, the writers of the contracts, in many cases. But I don't advocate that. I advocate moving more into have a sliver in Forex that's, automatically traded for you. Trade some in equities, futures yourself. Have your mutual funds inside the account for longer term stuff. But most importantly, take a look at the overall risk of the portfolio. Like I'm constantly doing in client accounts. What's the equity exposure risk for the time frame? But having the sort of full package of, some of that invests in, they got real estate, they have an equity portion of the portfolio. They may have smaller accounts that use to trade futures, and all these different types of diversification and trading will help improve the overall return and will reduce risk.
Okay, I want to dive into this diversification question.
Yeah.
It's kind of a two-part question, so focus on this. Two things. Number one, if you're starting out smaller, it seems like diversification might not be a good idea because you don't have a lot to spread around. So would it be a good idea to build one account to a certain level and then start thinking about diversification once you hit a certain landmark. So that's question number one, if you think that's a good idea. And then question number two is talk a little bit about what a good portfolio allocation would look like.
So sort of a pre-question one buildup, if you will, and this will just be my financial planning coming out. It's critical that one put their own budget together relative to the income that you're earning if you have a full-time job. Make sure you're not spending more than your budget or having lots of debt, right? That's more of that Dave Ramsey thing, right? But the key thing is just don't be overstretched. If you have the ability to save up some, you certainly need a couple of grand to get a, like a Robinhood type of brokerage account set up or some sort of futures account. Much requires a lot more capital. So you might want to wait there as far as building that component. But great thing about Forex is it attracts a lot of investors because you can open a Forex brokerage account with 5, 6, 7, 800. I'd usually suggest a minimum of $1,000 to open a Forex account and just have software trade it for you. It's a great way to start. And if the account does well, you can diversify into other areas. I don't necessarily suggest basing a diversification model on one account doing great and then you peel it off to diversify. I would save up and fund a number of different accounts. But do remember that if you're working at a profession for a company that offers a retirement plan here in the US, 401k, 403b in the public sector, make sure you contribute to that account. It's free money. You do not get taxed on it. So pay yourself first is why I always tell, some younger clients, pay yourself first. Make sure your budget's good at home. Make sure, you're out working hard, obviously, but then begin to start to build an equity account. Have a Forex account as part of it. And at some point down the road, if you can afford it, have a futures account, learn to trade all of them, or have different pieces of software you trust, running different pieces for you. It's usually the best way to do it. But, start off with making sure that your retirement accounts are set up in tandem with that. So ideally a 401k, a Roth, an equity account, and a Forex account to start. Seems like a lot, but eventually you can be built up to that if you're budgeting enough or you're saving enough money to get started in that.
Okay, that's a good tip, and I think that if we do diversify, that could help us long term to really, like you said, reduce risk and increase gains. So I know there's a lot of risks out there that people don't realize, whether it's even brokers going out of business or something like that. So it's really important because you never know. It can happen at any time. And you never know. There's no such thing as a guarantee when it comes to your accounts. So you definitely want to keep it in diversified. So we're getting kind of towards the end of the interview here, and we've gotten a lot of good tips, good resources. I think that's one of the things I really like about this interview is you've given us some great tips, but in addition to that, you've given us some really good resources that we can do additional research. So again, researching is really important. But my final question is, can you tell me a little bit about some of the things that you're working on right now and how people can get in touch with you to find out about that? Because I'm really excited about some of the funds and the training that you were telling me about that you are doing.
Mm-hmm. So if somebody wants to do a deeper dive into trading futures, I would just go to the fxestrader.com website. It's been up and active, and we have a big course that we've put together. It was a 20-day class that we shot in HD a few years ago that goes soup to nuts on how to trade the futures markets using technical analysis, using low risk, using calculated stops, using mostly time and volume based profiling, which is different obviously from just typical candle chart technical analysis or patterns or any of the Fibonacci retracements. It's all important stuff in trading, along with moving averages and MACD and RSI and all that stuff. But the key thing is the confluence of all of those factors are the best places to be buying or selling any instrument. And that's the key, is understanding where those levels of confluence are, where lots of factors, if you will, of what I just talked about come together. So that's what the course teaches. But at the very end of the day, understanding order flow in its most micro level, what I like to call the fine tuner of trading, is going to be that final step that allows you to take an execution one way or the other. That course is really good. It's going to help cut the learning curve a lot. But it probably seems strange when I talk about this and I'm asked to do lots of webinars, and I really admire Casey's work, and I thank you for your service to the country. So I wanted to be on this discussion, but it's important that people really understand what they're getting into. I find I talk just as many students out of going into my futures course as I do in it, because they just don't have the dedication. They're not willing to put in the time. So I think it's critical that you understand the reality of, yeah, we can certainly help you cut the learning curve trading anything, but you've got to put the time. You have to be dedicated.
It's a long haul, and it's a big commitment, and it's not going to be easy no matter what. No matter what system or training you get, it's going to be hard work.
Yeah, I mean, if you're looking for the easier stuff, I would suggest, get in touch with me through some of the links. You can even throw my email in there if you want. That's fine too. But get in touch with me if you have any questions on any of that. But you may want to take a look at some of Auvoria Prime software in the Forex space. The returns have been absolutely stellar with low drawdowns, which is a big reason I'm sitting essentially in the role I am with them, helping captain, 9,000 subscribers each week through, different macro and micro movements of the markets as we're seeing the S&P today. So that's kind of what I'm working on now. It's taken up a fair amount of my time, in addition to managing client accounts on the RIA side of the business as an advisor. But I think the thing that excites me the most, honestly, is just I don't know, it's always been so tough in the past as an institutional trader to get your hands on algorithms, right? The average hedge fund spends 5-10 million to code this stuff, and some of them just absolutely killing it. I just want a tiny little sliver of that, right? So that's kind of what I've been spending most of the time. That's why I jumped in bed with Auvoria. But I just essentially want a number of different pieces of automated trading different chunks of money for them. It just makes it a lot easier, You're not sitting in front of the screens 10 hours a day like I used to do.
Right.
So.
Yeah. No, that's definitely a wise decision. And
diversification, right?
Diversification, and asking yourself, why are you doing what you're doing? Is it to make a lot of money, or is it to be free so that you can have some time? And time, we got to look at our time. It's the one thing that is the most valuable that we have, much more valuable than money. You can't get time back. You can spend some money, you can always get that back, but time, you can never get that back. So
bingo.
Who wants to be a slave to the computer screen? Not me.
Totally.
Yeah. Well, Steve, this has been really good. I really appreciate it. Everyone that's listening, go ahead and check out Steve's profile, his Twitter, his website. We got 3 links for the website below. If you're interested in education, or whether you're interested in some auto trading, which is a really great avenue to explore and do your research on. But with everything, you want to do your due diligence. I think Steve's a great guy and a great guest, but I know he would tell you to do your research, find out before making decisions, come up with a plan, and execute and follow that plan. But Steve, thanks a lot for being on the show. Really appreciated having you today.
Yeah, you're welcome. Everybody be safe, be smart, and as I always joke at the end of my calls, may the trades be with you.
That's a good one. All right. So for everybody that's listening, until the next episode, we'll see you soon. Bye.